This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hello everyone, Andy Pickering here. Got a fun show for you today. Before we get into it, got to give a shout out to our new sponsor. Yes, we have a new sponsor, and that is Prime XBT. Yes, Prime XBT is an award-winning Bitcoin-based trading platform that offers access to over 50 assets, including crypto, forex, commodities, and indices. And to provide the highest level of liquidity, Prime XBT aggregates data from 12 industry-leading exchanges and data feed providers. Prime XBT offers high leverage. Yes, indeed, they go up to 100x on crypto assets and as high as 1000x in the traditional markets, and their interface is suitable for both professional and beginner traders. It's also home to a co-vesting platform which allows users to apply the copy trading strategies of the most successful professional traders. You want to learn more? Of course you do. Just check them out today at primexbt.com. And of course, I will make sure there is a link in the show notes. But for now, it is on with the show. My guest today is Rekt Capital. Rekt, of course, is a pseudo-anonymous cryptocurrency trader, analyst, and course provider, and by now probably a semi-regular guest here on the Crypto Conversation. Welcome back to the show, Mr. Rekt Capital.
It's great to be here, Andy.
All right, well, it's good to have you here. It's it's a funny old time. You know, we're basically halfway through December. Coming to the end of Q4, and it was a December and a Q4 that everyone was expecting to be, if not mega bullish, if not ultra bullish, at least, reasonably bullish for Bitcoin and the wider crypto market, but it is not playing out quite like that. So I thought today it's a good opportunity for us to catch up and kind of reassess where you think we are in the market cycle. Can the bull market be rescued? Are we turning into the dreaded bear, or are we just kind of in no man's land somewhere in between? All right, where do you want to start? What's the price right now?
Well, right now the price is around 47,000, and to touch upon rescuing the bull market, I think a lot of data science models are suggesting that this current retracement period in Bitcoin's price action is nowhere near a great opportunity compared to the May 2021 period, corrective period. In May, we saw a lot of those data science models get overextended for one of the few times in history where we saw extreme fear precede that reversal. So in May, we saw loads of data science indicators get overextended, whereas now on this correction, none of those data science indicators and models are really showing that sort of overextension. If anything, this retracement isn't really showing any outlier behavior in terms of the data science. But when it also comes to moving averages, for instance, the 50-week EMA is a very important indicator in supporting a bull market, and this has historically been the case, and the 50-week is indeed supporting it still. And in fact, we're seeing many similarities of this retracement compared to May 2021 through the lens of these EMAs, the 50-week EMA figuring as a support and the 21-week EMA figuring as a resistance. And just like in May 2021, we saw consolidation in between these EMAs, and we're seeing the same thing exactly right now. So it's quite interesting to still see similarities, even though the data science indicators are a bit different. In denoting these retracement periods, the EMAs are showcasing that there is still a fair degree of similarity in how they're consolidating and forming potentially reaccumulation ranges before yet another uptrend towards the upside.
yet another trend towards the upside. Well, I mean, yeah, everyone would like to see that, and I suppose one of the cases for that being the case is that, you and I have talked about this before, and there's always different commentators on Twitter making different arguments for effectively what we used to call the 4-year cycle maybe being over, and now some people think it's a longer cycle, but more likely there are diminishing cycles and not even cycles, and it doesn't necessarily even need to be necessarily bull and bear markets. It's just kind of corrective periods and bullish or upward periods, and maybe that's the best case right now. What do you think?
Well, definitely the 4-year cycle as we know it is changing, because definitely lengthening cycles are impacting the 4-year cycle as we know it today. So because of those lengthening cycles, we're seeing some carryover effects when it comes to the 4-year cycle. And for those that don't know, the 4-year cycle essentially denotes 4 one-year candles for Bitcoin's price action. And in each of those candles, we see a certain phase. So in candle 1 of the 4-year cycle, we see exponential highs, new all-time highs, the greatest euphoric growth in that particular year. And then candle 2 is the bear market, candle 3 is the recovery bottoming out candle, and then candle number 4 is the recovery candle. What happened in this current 4-year cycle, or at least the 4-year cycle that ended in 2020, because candle 4 was the candle that ended the 4-year cycle, the previous one. We're currently theoretically in a new 4-year cycle, which is supposed to be 2021 is supposed to be candle 1. But what happened in candle 4 of the 2020 year and that 4-year cycle is that candle 4 actually rallied to new all-time highs, which is something that candle 4s don't typically do. And that was already a sign that we were seeing some carryover effects in terms of the lengthening in the cycles. So effectively, we were seeing more bullish momentum than we should have seen. And this sort of pushing, extending in the Bitcoin cycle is by a period of a few months compared to previous cycles. And we're already seeing that lengthening in terms of price positioning relative to the halvings. So we tend to see, for instance, after halving 1, Bitcoin topped out about a year after halving 1. After halving 2, Bitcoin topped 400 days plus after halving 2. And after halving 3, it's already 500 days plus. And we still haven't seen a top, or at least that's my opinion. I still feel like we're in a bull market, and it'll still be a bit of time before we see that final bull market top. And the fact that we're extending and that cycle is lengthening, the 4-year cycle itself is going to be changing in a way where previous 4-year stages. So for instance, let's take the candle 1, which is supposed to be the most euphoric candle in a 4-year cycle. That's now carrying over into candle 2, which was supposed to be a more of a bearish candle. So we're seeing parts of candle 1 figure in 1 year, and then parts of candle 1 are figuring in the next year, and then the bear market is essentially being delayed. So we're seeing these carryover effects by a few months, which is fundamentally changing the 4-year cycle as we know it. So let's assume that the cycle is being lengthened by 6 months, 5 months. Then this could, at this point in time, be called the 8-year cycle in some way. But of course, the lengthening itself isn't a constant, because we're seeing progressive lengthening after each cycle. So maybe we're seeing a lengthening in terms of 6 months right now, but in the future, we'll probably see a lengthening in terms of 9 months, and then maybe even 12 months. So the 4-year cycle is going to be more and more disrupted, but the actual phases inside those 4-year cycles, for instance, the euphoric parts of the cycle, and then the bearish parts, and then the bottoming out parts, and then the recovery parts into a new bull cycle, what would take 4 years is now going to take a few more years longer. We're going to see euphoric parts of the cycle take longer, and then bear markets take longer as well. And then bottoming out and accumulation periods at bear market bottoms may also extend as well. So we're just going to be seeing this 4-year cycle. Well, we can't talk about it as a 4-year cycle any longer, given this extension, given this lengthening, but those phases are still very much important in terms of accumulation, acceleration into a new bull market, reaccumulation, and then all-time highs, followed by bear trend, then recovery, or at least bottoming out, and then recovery. Those phases are going to be extended, but those phases are still valuable checkpoints in the cycle. And in terms of this current cycle, well, we're still trying to recover outside of that mid-cycle period, which we saw in 2013, but in 2013, we recovered out of that mid-cycle correction relatively quickly, whereas now it's taking actually considerably longer to recover, but we're still in that valuable, vital checkpoint of recovering from the mid-cycle and trying to just reaffirm a base inside what theoretically could be a bear market bottom in the next cycle. But of course, there are many different variables there. I think at this current time, Bitcoin is just solidifying a base at around the 30K, 69K region, this being a macro reaccumulation range. And once Bitcoin breaks out from this reaccumulation range to new all-time highs, in the next bear market, this 30 to 69K reaccumulation range could actually figure as a valuable source of demand. And that doesn't necessarily mean that in the next bear market bottom, when Bitcoin retraces, we're going to reach 69K. In fact, far from it, we might actually bottom at 70, 75K, because that demand there is going to be so strong, propping up the next trend, so that bear market bottom won't actually form in this reaccumulation range that we're seeing form right now. But the fact that we're seeing consolidation here is actually setting up not only trend continuation in this current cycle, but a reversal and bear market bottom in the next cycle.
Okay, well, interesting, very interesting thoughts, Rick. And, if that's the case and we are in, an accumulation or reaccumulation range, sorry, it's a bit early for me. I need my coffee to be able to say those big words. But with price now at 47,400, so we've dropped 6% in the last 24 hours, so now well under 50K. So it doesn't look amazing, but I made just a few notes to see if I could find any data points that don't indicate complete doom and gloom, and they are out there. It's easy to find. So look, just looking through my notes, you've probably seen that the Bitcoin hash rate is at a new all-time high, and not only that, but now I think just this week we ticked over 90% of all Bitcoin have now been mined and distributed. So there's actually only 10% to go. And of course, that 10% is going to just fall rapidly over the next 20 or 30 years of distribution. At the same time, a lot of people have pointed this out, particularly the on-chain guys, the illiquid supply of Bitcoin is increasing. Also, the liquid supply on exchanges is dropping. So it's quite strange for that to happen while the price is dropping, but that is still holding true at the moment. And of course, God bless him, Michael Saylor is still triumphantly buying the dip when he can. But I saw that the Purpose Bitcoin ETF, I think that's a spot-based ETF in Canada, they've bought 4,300 BTC just in this month, in the last few weeks in December. So, and another last point I'd quickly make is I think Sue from Three Arrows Capital had an interesting tweet that he thought it was quite interesting in the way that a lot of crypto Twitter, they kind of now view Bitcoin as a boomer coin and they're not too interested in it precisely at the time when politicians around the world, particularly in the US, are starting to wake up to the possibilities of Bitcoin. Some even going so far as to take some of their paychecks in Bitcoin. Of course, the same is happening with a lot of leading sports figures and the like. So it's clear that adoption is fast growing. Yeah, back to you, Rect.
Yeah, these are really interesting points because that's the macro perspective. What's happening over the past few weeks, past few months? We're seeing this increasing adoption, increasing interest. But if we just zoom in and focus on the smaller timeframes, we're going to see price tumble. But we shouldn't be distracted by this downside volatility that's occurring on a relatively narrow time frame. We're seeing Bitcoin retrace by about 30 to 40% over the past 4 weeks or so. Historically, this isn't a correction that's out of the ordinary, but it is occurring over the past 4 weeks, whereas we're seeing these changes in adoption and whatnot happen over the course of a few months, and it's not stopping anytime soon. So the fact that we're focusing on the volatility right now, that's just noise, in my opinion. What's more important is to pay attention to the signal, and all of these points that you mentioned, Andy, are very much tapping into that signal.
Yeah, and another. I made some notes also. I saw someone else was talking about how you can make the argument that the market has been frothy, and when the market does get too frothy, we can expect some of that froth to be taken off the top. But while the kind of the blue chip assets, Bitcoin, Ethereum, Solana, and the like, are certainly significantly down from their all-time highs. A lot of the rest of the market has really been hit a lot harder already. DeFi has been, really a lot of those coins are 50% down from their all-time highs or more. Even NFTs, as much as there's a lot of talk and activity in the NFT markets, the volumes are down, and floor prices on a lot of NFT collections are down. Maybe some of the blue chip NFT collections are holding on. Dinosaur coins, I'm not sure if that's a fair, accurate description. I know you're a Litecoin fan, Rect, but let's say coins that were big in 2017, Litecoin, Bitcoin Cash, Stellar, EOS. These coins are down, between 60 and 80% really from their all-time highs in USD terms. So you could argue that, some of the heat, the froth, if you like, has certainly already been taken out. So, maybe that's one argument, that there doesn't need to be extreme levels of downside from here.
Absolutely, that's right. Whenever we see strong Bitcoin movements, like we saw over the past few months, rallying to new all-time highs, altcoins are going to generally suffer because that's where we see the money flow. Investors are chasing the Bitcoin uptrend as it makes higher and higher new all-time highs, whereas altcoins are always going to inevitably lag in terms of the money flow cycle. Investors are going to be chasing what's relatively hot at that point in time. So when Bitcoin was advancing to new all-time highs only a few weeks ago, altcoins were struggling to keep up. But then since we started seeing this correction, people started selling their altcoins as well. So altcoins haven't had a environment to outperform Bitcoin, really. But what's interesting is that Ethereum on its BTC pairs is actually making new highs for the first time in many, many years. And that seems to be an interesting, promising development when it comes to the money flow cycle. When it comes to altcoin BTC pairs, could it be that Ethereum BTC is actually setting up the next alt BTC pair money flow cycle? Of course, altcoins have taken a tumble. We've seen NFTs perform well, and we had the DeFi summer, of course. we saw loads of those altcoins in those areas perform really well. And that's what it's all about, these trends and periods in the market where there is a focus on a select few altcoins, or at least a movement. So for instance, DeFi and then NFTs, there's always going to be a trend or a narrative. And that's why new altcoins perform really well during this period, especially if they don't have a lot of price history. When it comes to these dinosaur coins, as you mentioned, Andy, those coins do have established price history. So those resistances are going to be much stronger when it comes to sell side pressure, because people have bought in the past at those levels and are still waiting to break even and want to place those sell side orders there. So we tend to see quite strong rejections, and it's difficult for those dinosaur coins to actually rally quite strongly, just like these newer coins, which actually don't have price history and don't have those sellers at those price levels. So novel coins are always going to outperform in the market, and older coins are going to always struggle in that sense. But it doesn't feel like we've still seen mania in the market, just like in 2017. And it doesn't feel like that for Bitcoin. And of course, it also doesn't feel like that for altcoins, which tend to rally euphorically once Bitcoin has made its actual new all-time high. And we haven't actually seen that money flow into altcoins just yet.
Yeah, well, I certainly agree. We haven't had that FOMO rally. We never got any kind of blow off top. You could certainly make the argument that we got a double top, and if you look at the zoom out on Bitcoin, it does look like a double top at the moment. But kind of different views can still be right. It can be a double top, and then we can have this consolidation period and then resume the bull market again next year. But it does occur to me, Rekt, that one guy who's probably feeling not great about particularly Bitcoin's price performance this month in December is Plan B, because of course I think for the stock to flow model to hold, I think that by this month Bitcoin was supposed to be not even just have achieved 100k, but an average price of 100k, and I think it's fair to say that is off the table, not going to happen in the next 2 weeks. I'm sure maybe there's there's some wiggle room in the model that that dog, if you like, can be off his leash, to the downside for maybe a little bit longer. But yeah, I don't know. How do you think Plan B's feeling right now?
Well, so before I talk about the stock to flow, I'm actually really happy, Andy, that you mentioned the double top formation. If we cycle back to May 2021, we saw a head and shoulders formation form on Bitcoin's price action. And I actually posted a tweet in May that it's a very obvious bearish formation. It's maybe even too obvious, and it would be the ultimate bear trap if that head and shoulders were to completely form but never actually validate, whereby Bitcoin would just rally towards the upside and to new all-time highs. And I posted that tweet in May, and since then, Bitcoin did invalidate that formation and it rallied to new all-time highs. What we're seeing here is an analogous situation, whereby we're seeing another quintessential M-like formation, and the mantra for double top bearish trend reversal formations, M for murder. Whenever you see an M on the price chart, that's when you should probably think of bearish thoughts. But in this case, I feel like it's very similar to what we've seen in May, where we saw this quintessential bearish formation form. And at the point of validation of that bearish formation, Bitcoin just goes the other way and then invalidates it completely. So I do see that sort of parallel in terms of these bearish formations. And when it comes to the stock to flow model, I know that Plan B was posting every month that the price of Bitcoin should be this month, and then it should be that the next month. And for a few months, that was actually working out quite well for him. But this month, I think, is where we saw underperformance. And I think that's a very dangerous trap to fall into, because once you do mention a price and then that price isn't actually realized and hit, then there's a lot of negativity there. But I still feel like it's a really important model to just reference in the space. It still has utility. And the way I think about the stock to flow model is not necessarily understanding what the price of Bitcoin should be every single month, but rather the deviations in Bitcoin's price relative to the average, the 360-day average of the stock to flow. And these upside deviations or downside deviations, these essentially signify bull market peaks and bear market bottoms. So we haven't seen an upside deviation beyond the stock to flow 365-day average. In fact, that average has flattened out and it denotes a price point of 77K, and Bitcoin is quite considerably below that stock to flow average, and we still haven't seen an upside deviation. And I feel historically, this has been the case, that bull market peaks tend to occur once those upside deviations occur. But we haven't seen that upside deviation take place in this current cycle, which is something to also pay attention to, because a lot of these data science models are not suggesting that it's the end of the bull market and it's the beginning of the bear market. Even the Pi Cycle top moving average indicator, which was very, very accurate in May in denoting a mid-cycle correction, we saw a Pi Cycle crossover, essentially where two moving averages cross over, and within a few days, we see a local top take place. The Pi Cycle top, out of many data science models, it was the only one that actually preceded that mid-cycle correction in May. This time around, there is no bearish crossover happening. In fact, those moving averages, which denote crossovers, whether they're bearish or bullish, those moving averages at this point in time are so far apart that we couldn't see a crossover occur for a few more months. So it's interesting to see how these different data science models aren't screaming bearish to us. And the stock to flow model, of course, while saying that we'd go to 100K at the end of this year, I wasn't really banking on something like that happening. I just focus on price positioning relative to technical levels. And when it comes to the stock to flow model, I'm still looking for that upside deviation, and that upside deviation will begin once 77K is breached. And then we have the countdown for the bull market going off, because once we see an upside deviation beyond the stock to flow line, that's when we really need to pay attention, because price doesn't sustain those highs for too long. It only takes a few weeks, several weeks before that bull market peak is reached and the bear market begins. But at the moment, that upside deviation hasn't happened yet. And maybe plan B is feeling bad if he is. I really, it was a very good trend where for the past few months he was pretty much accurately calling the price of Bitcoin. And if this month didn't work out, that I don't think that's something that should be treated negatively. I think it's still a model worth paying attention to, and it's a very important data science model to always just glance at frequently, just to understand where we are in the market cycle, and just to understand the price positioning of Bitcoin.
All right. Well, let's start to finish off, Rekt. So let's just get some, I suppose, final scenarios, both bullish and bearish. So let's. You've made it clear, I suppose, that you do hope to see some bullish continuation. When do you expect, or when might that happen? Are we thinking Q1, Q2? Just quickly lay out the bullish scenario, and then after that maybe we'll look at some of the factors that could negate that scenario, and what could happen if we go bear.
So it's difficult to time-wise say what could happen to Bitcoin, when could it happen. I always look at the technical points in Bitcoin's price action, and seeing as Bitcoin is in a macro reaccumulation range from 28 to 69K, theoretically, Bitcoin is macro consolidating inside this relatively wide range. So theoretically, one could say that we're going to revisit the range low of that range. I don't think we'd rally or at least drop down that deep. But if we were to drop down a little bit more than 40K, even into 35K, it would be really important to watch out for a higher low relative to the 28, 29K May low, or at least July low that we saw. So theoretically, when it comes to Bitcoin's price action on the macro scale, it's still consolidating inside 28 to 69K. And that's essentially a range at highs. So it just depends on how deep does Bitcoin need to go within this range, because theoretically we could also think about a midpoint rebound where in the very middle of this reaccumulation range, Bitcoin would be able to find some support and then revisit the upper half of that macro reaccumulation range. So at the moment, there is no real sense of a bear market looming, because we have seen 4 weeks of downside really, and sell side exhaustion is going to become a factor, especially since investors are extremely fearful towards Bitcoin at this point in time. So I do feel like the rest of the year isn't going to see much of a recovery, much of a sustained recovery. But when we think about lengthening cycles, end of Q1 or even end of Q2 is where we could see the bull market peak. But that also depends on when Bitcoin first breaks out of this macro reaccumulation range. And by the same token, when does it perform that upside deviation beyond the stock to flow line? So there are a few technical steps that Bitcoin needs to satisfy before we can understand how much more will this cycle lengthen. So if Bitcoin bottoms in the next few weeks, tries to form a period of stability at around the high 40s, mid 40s, low 40s, if we see some sort of basing out period there, consolidation, just like we saw in May 2021, then breaking beyond 52K and turning that into support, that's probably going to be a very good trigger to just suggest that this correction is over and that the bottom is in. And this consolidation could take a few weeks, just like it took in May. So it's all about, I think the next few weeks are just going to be this sort of consolidation. And if we focus on May for a second, it consolidated there for a period of a few weeks. That sort of consolidation was just happening in a very volatile manner, but it took place over 7 or 10 weeks roughly. So if we see this sort of scenario take place, then still early Q1 would be relatively unremarkable and uneventful for Bitcoin. It would only start to pick up the pace from mid Q1 maybe. So it's all about these technical steps and Bitcoin just satisfying them to see how could Bitcoin recover and when those technical steps are going to be satisfied, because once 52K is reclaimed into support, and that's a 21-week EMA, which is a bull market indicator, reconfirming that as a support is probably going to be a good confirmation that we'll see further upside. And once that happens, whether that's mid Q1 or just before mid Q1, then we'll probably see that cycle lengthen, maybe even into Q3. So it really does depend on these checkpoints, these technical milestones. At the moment, we're still trying to figure out this basing period and see how much more will Bitcoin be able to consolidate, because at the moment, even though we're macro consolidating from 28 to 69K, Bitcoin is consolidating inside these two EMAs from 42 to 52K. So as long as Bitcoin maintains 42K, then we're not going to see any lower levels for in this current correction. We're still just consolidating on the micro scale inside these two EMAs. And this looks like it's copying May 2020 with this sideways price action.
Yes, indeed. Well, I guess, we just got to consolidate, be the consolidator. And listeners, if you are interested in perhaps a slightly more bearish perspective, Josh, of course, the lead analyst here at Brave New Coin, he put a video his latest BTC and ETH market update. I think he called it Failure to Launch. Published that on the Brave New Coin YouTube channel a few hours ago. And Josh, probably fair to say, is reasonably bearish just at the moment for the short term at least. But yeah. All right, we'll have to see how this plays out, Rekt. As we finish off, I think you had how are your courses going? What's going on for you in the lead up to Christmas and the new year?
Well, recently I've launched the Bitcoin investing course, which does dive deep into these data science models and these indicators just to try and understand questions like how much is Bitcoin really lengthening in its cycle? How's that going to impact things like the Fourier cycle, but also other things in terms of where the point of maximum financial opportunity resides on this retrace and in general in the next bear market and in the next bull market after this one. So I do look at all these different data science models just to come up with timeless principles for your Bitcoin investing strategy, just to understand at which point in the cycle are we, where Bitcoin could peak in its bull market, where could it bottom in the bear market, and then where and how could Bitcoin progress in its new bull cycle. It's all about understanding these investing strategies and coming up with different strategies to either profit circulate into altcoins at different times in the cycle in a bull market, or whether it's actually better to preserve your capital and secure your life-changing gains, which you've made throughout the bull market, because all too often investors make decent returns on their Bitcoin investment during a bull market, only to see those profits just fade away during a bear market, where we see that bear trend continue on for 50 plus weeks, as we've seen in the past before. And bear markets tend to last that long, but they also tend to be 84.5% deep. So it's really important in just pinpointing times in the market where we're actually going to confirm bear markets, confirm bull markets, because at the moment we haven't seen strong confirmation that this is a bear market, despite the panic on crypto Twitter. So the Bitcoin investing course is all about just giving you that level-headed insight, unbiased, data-driven points of view, just to appreciate the macro perspective to help your Bitcoin investing, whether that's in a bull market, a bear market, or even the bull market after that, because we have many phases in this current market cycle still to enjoy, and there are many different phases still ahead, whether that's bearish continuation in a bear market months from now, and then a basing period when it comes to downside deviations below the stock to flow line, and then accumulation in periods of extreme fear and maximum pessimism. A lot of that psychology is also investigated and spoken about in the course. So it's all about building this educational resource that's going to be still very relevant for the coming years, because these are all strategies that I teach in the course, because tactics will change from cycle to cycle, but strategy is something that will never change. And data science is a very important principle, or at least something that should be in your arsenal when it comes to investing, because during a cycle we can get extremely fearful or we can get extremely greedy. But if we look at the data science and just deviate from the hot emotionality of our investing, looking at the cold data-driven insights from data science models, these are the things that ground us during difficult times. And the Bitcoin investing course that I've launched it embodies data science, it embodies level-headed data-driven insights, and it's supposed to be a resource for the coming years that will help you navigate the market in a way that's not too emotionally involved. It's supposed to be a level-headed take and an unbiased take, because data science is ultimately what grounds us, especially during volatile times like now. And I feel like this course it's come out at a really good point in the market where people are really doubting and are very uncertain about Bitcoin's current trend.
Yes, indeed. And well, do you find with your course signups then, Rekt, it's it's a commonly observed phenomenon across the crypto industry. As the Bitcoin price goes up, then all other metrics do as well. So like our BNC website visits go up exponentially with the price, and so do podcast downloads, Twitter followers, all that kind of stuff. It's the same with, visits to exchanges and new user signups. Funnily enough, I actually had the highest last month. November was my all-time high in terms of podcast downloads, which was slightly ahead of website and YouTube views and things like that. Price was okay last month, but it wasn't like sort of going crazy like back in May. But do you find that as well? There's much more interest in your offerings as the price is going up.
Definitely, there's always going to be that fluctuation in terms of the emotionality in the market when things are going up and investors are enjoying their time in the market. They want to further their knowledge and they're eager to expand upon the tools that they have in their arsenal. But of course, when price is going down, that's also a really good time to be thinking about dollar cost averaging, thinking about investing strategies that we could actually develop to make the most of this discount. And downtrending times and consolidation periods are the best times to be investing not only in the market, but also in yourself. And it isn't a natural instinct, because a natural instinct is actually to invest more when the market is going up and to read more and delve into these resources, whether they're podcasts or even portfolio tracker apps, tend to see more activity when the price is going up. So of course, naturally, it does tend to be that way, that when prices are going up, then everything else is going up. But by the same token, for me personally, I love to take some time off, for instance, during a red candle or a few weekly red candles in a row, because it's a time to recharge, but also read around crypto and read about Bitcoin and also try to grow as an investor. And these sort of periods are one of the best periods to just sit down and take some time off from actively trading in the market and start building a strategy how to make the most of those discounts, and by the same token, invest not just in the market bit by bit via a dollar cost averaging strategy, but also in yourself. And that's probably one of the best investments, right side by side with Bitcoin. Investing in Bitcoin and also in yourself, those are the best ROI investments to make.
I love it. Great advice, Rekt. All right, let's close this out. Tell the people where they can go to find you on your various platforms. I know you're very active on Twitter, and where's the website for your various courses?
So feel free to follow me on Twitter at Rekt Capital. I'm also an author of the Rekt Capital newsletter, which shares cutting edge insights on Bitcoin and other cryptocurrencies, altcoins as well. You can visit the website when it comes to the course on rektcapital.gumroad.com. You can find that link in the show notes, but also on my Twitter profile, I have a link for the newsletter and the courses there. But yeah, thanks so much for having me today, Andy. It was a pleasure, as always.
Awesome. All the best, Rekt, and Merry Christmas and bye for now.
Merry Christmas and a Happy New Year.
All right, there you go. That was me, old mate, my good friend, Rekt Capital. So I hope you enjoyed that. Is Bitcoin just hanging on here? Are we accumulating, reaccumulating? Probably not such a bad idea if Bitcoin does just trade in this consolidation zone for some weeks or even some months and just establish a good groundswell of support. And then, who knows, stranger things have happened. We could resume the bull market next year. I mean, there's just you can't deny that there is a huge amount of interest in all things crypto from all around the world. So I don't know, might take some kind of catalyst to reignite things, and also, to be fair, we could see some kind of catalyst that would just ignite things to the downside as well. That's markets. In the meantime, what are we? We're a week or two out from December. Still lots of podcasts to come. And yeah, as I say, we did hit all-time high podcast downloads here at the Crypto Conversation last month in November. So look, if you're a regular listener or a new listener and you've made it to the end of this podcast, but you are a listener, then many thanks to you for listening to the show. Always appreciate it. And look, if you do enjoy the show, please always feel free to give us a nice 5-star rating on Apple Podcasts, if that's where you listen to your podcasts, or just subscribe to the Crypto Conversation in whatever podcast app you are using. All right, I think we'll leave it there. Thanks, everyone. That was today's show. This was the Crypto Conversation for Brave